Good morning, everyone. We are back today after a very, very eventful day yesterday. Jerome Powell blowing everything to smithereens. Let me see here. Let me just find what it is that I'm looking at. Huge downside move here in these markets from yesterday, and everyone's starting to get very worried. They're like, oh my god, it's over. I knew it. Like, here comes the massive turbo pullback. We're all screwed. No Santa rally. Only shorts for the rest of the year in our lifetimes. But it is, yeah, it's a very, very big pullback. I get that. It's a massive move. But at the same time, right, I am one to not necessarily think that this is the start of something cataclysmic. We talked about this yesterday. I talked about a hawkish cut, if you guys remember, which adds to the frothiness of this market. Right now we're up a little, but if you look back to even last year or 2 years ago, when you look at this pullback, it's not so over in a sense. Yeah, it's pretty drastic. It's very oversold. I think that we can try to pop into the new year. I don't know how aggressive it's going to be. I don't even know if this is necessarily the bottom, but I think we are close to it. And this little pop, it might get sold off, but I don't see this as beginning some kind of down 10, 15, 30% as a lot of these bears are looking at it. It was just a hawkish cut, right? It made sense from a different perspective. The Dow Jones got absolutely clobbered. We've been talking about this value divergence for quite some time. Dow Jones down about over 1,000%. Nasdaq down 1,000%. We had a disappointing policy outlook in a sense, right? The central bank is now set to cut only twice in 2025, so the dot plot had changed a little more drastically than people would have assumed. And all of tech and big players in the market are like, oh god, no, we're so effed. There's no more cuts. There's less than we thought. No more stimulus. And then they overreacted in a sense. We saw that they're now forecasting 2 compared to the 4, so that's a decent little adjustment there from the last assessment in September. The forecast also helped Treasury yields jump while the S&P and the Nasdaq got clobbered, right? With the economic projections showing inflation would remain sticky next year, which, right, is a tough one. You've got creeping up inflation based on these lower rates, and naturally the market's not going to be super happy about it. So trouble was brewing even before the latest FOMC meeting, with the Dow Jones logging its first 10-day losing streak since 1974. Right, this is one of the things that not only were we looking for, I think everyone was looking at it, and the breadth was horrendous. This is one of the things that I was just honestly astonished at. You can see that breadth right now is extremely oversold. This is the most oversold breadth that we've seen honestly all year from all fronts, right? If we take a look at the S&P 500, this is pretty insane because we're 3% off an all-time high. So interesting stuff's going on in the background here. Now, in recent days, there also been fear that the Fed is slashing interest rate outlook, which made sense because like we had talked about as well, they got a little too aggressive right at the start, and it doesn't seem like that is the path to take. So now they're pulling things back because inflation just started jumping right away. So what Jerome Powell said is, I think we're in a good place, but I think from here it's a new phase, and we're going to be cautious about further cuts. Logically, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive, and frothy parts of the market got whacked in the latest statement, with notable plays taking a dive, like Tesla down over 8%, MicroStrategy down 10%, as well as Bitcoin falling back to 100,000, which is it's not really much of a worry. But amid the word that the Fed is not allowed to hold the cryptocurrency as well. The most talked about headline among investors has been the losing streak on the Dow Jones. Most of the index's losses have been due to a handful of its price-weighted average constituents, like United Health tumbling about 20% since the fatal shooting of Brian Thompson, and President-elect Trump's promise to knock out the drug industry middleman. Interestingly, UNH rose on yesterday, and the Dow itself was down about 6% since its last all-time high, with some some of its post-election gains even intact. So a big divergence right now. Like you can see, pretty much everything across the board is gapping up slightly here. I wouldn't be so quick to just like start jumping into this and like buying everything just yet. I think that we need to see some kind of momentum move and failed acceptance that moves through distributions higher to allow us to identify that kind of turning point. This morning we had GDP numbers, initial jobless claims, which didn't really shake markets up. But right now, like if you look at the S&P 500, we're in a pretty mega distribution down here, below 59.90, right, all the way down to close to 5900, the lows of yesterday, with a very interesting profile on the overnight, with heaviness of volume on both highs and lows, with the POC right in the middle. So realistically, until we start getting closes above 59.90, above 6,000 on the S&P, it doesn't seem like the easiest long and the easiest buy, but I think that the Santa rally isn't fully off, right? That's my opinion. I stand to be corrected and wrong, but I think that there is some kind of a pop that happens going into the new year, whether it's from a bit lower, right? I don't think much lower at 58.80 in mind, or whether we start from today and into the end of the week, we have some kind of decent pull to the upside swing. So those are my general thoughts, right? It is Thursday. Tomorrow we'll be doing our live stream on YouTube, so remember to join us for that. And hope everyone has an amazing trading day and didn't get their asses spanked by the Fed, right? Remember, Fed days, they're crazy, right? There's a lot of volatility, especially if you're on the wrong side. If you're stubborn and you see this massive drop and you're going against it, you're going to get your ass handed to you, and not everyone has the greatest Fed days. So I opt not necessarily to trade them. I had 0 trades in the afternoon yesterday. I made the coin in the morning session and walked away, right? And yeah, maybe I missed the shitload of money, or maybe I saved my ass from getting destroyed. So it's just another day, a highly volatile news day that, like, yeah, you can make a lot, but they're not necessarily consistent in terms of the following day's potential movement. Anyways, you missed this one, you'll probably miss a bunch more that come. Doesn't really matter too much, right? Trade the plan, trade the strategy, that's all that really matters. And if the Fed kind of takes away from that, no pressure to do so. So, hope everyone has a great trading day. Rant over, and let's see how the follow-through with the Fed takes place. I'm still bearish under 59.90/6,000 on the S&P. It's going to be hard for me to turn bull right now, but if they do it, right, I don't want to be on the wrong side of that. NASDAQ 2 is looking a little more bullish until about 720, 740. I think those are upside targets where maybe some sellers want to come through, but the S&P is just a lot weaker. S&P a lot frothier, a lot shittier. We've had way too many days of 2 to 3 of the sectors being green, while the rest of them have remained red, and the market continues grinding higher. So take that as you will. Let's open up our live trading room. I'll see you all tomorrow, and enjoy Thursday.